Is what we're seeing here, is this an isolated incident or is this a sign of systemic risk?
Oh, good morning, Frank. Yeah, I think it's isolated. Silicon Valley Bank had two issues that are, put it in the specialty category for one, and I think, just trouble spots. One is a very high deposit ratio in terms of a funding source, and we find out when venture capital firms, others, these startups rather want to remove funds, it puts undue pressure really on the organization. And secondly, of course, catering to a specific area of the economy in terms of technology startups. So, I don't think this is a reason for worry. Yesterday's bank performance is, clearly had the air of contagion fears, but I don't think this is something that is systemic in the bank industry.
All right, so you're saying there's not a big reason to worry, but some other people have differing opinions. Bill Ackman, for example, last night, he sent out a tweet basically calling for a bank bailout. I want to read you the tweet. He says the risk of failure and deposit losses here is that the next least well-capitalized bank faces a run and fails, and the dominoes continue to fall. He goes on to say that's why government intervention should be considered. What do you think about this? You just told me you don't think there's risk of contagion, but is the fear of contagion potentially a risk unto itself?
Well, it always is that fear factor, clearly, but I think he's referring specifically to Silicon Valley Bank and a potential bailout, scenario. Um, I think there are reasons to not like the bank group today, and those would be, the Fed unable to stick that soft landing and having delinquencies rise too high, massive, increases in credit losses and loss provisioning. Also, the very weak capital markets. We've had a dismal start to the year again in terms of capital formation. Um, but the Silicon Valley Bank situation, I don't think again is going to be systemic and cause bank runs outside of some of these firms that are worried about meeting payrolls and funding their own growth situation, and again very targeted to startups in the technology space.
All right, so we've been talking about the big banks for the most part, but yesterday we saw the KRE regional bank ETF fall 8% as well. Whether it's big banks or regional banks or even just small banks. Are there other areas in financials that have treasury holdings that you believe could be concerning or troubling going forward?
Well, there are some smaller regional banks that might have some pockets of overexposure to single sectors, and that might be of some concern. We cover the very large banks, the systemically important institutions, which have just phenomenal capital cushions that have a wide variety of funding sources in terms of deposits and other sources of funding, and that would not be at risk from this type of contagion. So yes, there pockets of weakness. Sure, the Fed has highlighted this notion of the having the available for sale and held for till maturity losses in bank portfolios now exceeded about 600 billion. And banks don't need to take those losses if they hold them to maturity. And I think that's where the vast majority of the banking sector is, not forced into a position of selling. And again, having a very broad distribution of funding sources, particularly for their deposit levels.